Hello and welcome to another video. This video is on none other than the semiconductor, the chip business. But is it? That's what most people think about this business. But this business, they have very diversified into many different sections. For sure, their main business is semiconductor, but they are into deep into different businesses. And so what I will do in this video, I will go over the business, what their main business is, try to understand then their financials, then trying to understand if there is any risk because of COVID and all, and then try to form an opinion as usual from the long-term perspective that whether it's a good for our portfolio or is just another hype. Because since 5 years, that stock did really very well. It's did 19 times up, and this is one of the best company if somebody has invested it. One of the very good growth company, maybe retired by now. But none other than it's not too late. Let's see, does this stock has still is like a horse, right? So we can ride on it. Okay, so let's get started. Okay, so before so this is um, the agenda what I have explained. So before Okay, so this Nvidia business is more into the gaming, AI, this virtual reality, and this self-driving cars. So the main core is the GPU and semiconductor category from the GIGS classification perspective, but they're really more into the computing, more GPU powers, and they are into many different sections. And these are the gaming industry itself is very big. The AI industry, as you know, the world is we are moving into the AI age, and this AR is still this virtual reality is still going up, and that's the self-driving car. And on the self-driving car, they also recently has the contract with the Mercedes, which I will show as well, right? So that's another very big bonus for them. Okay, so we'll cover more into the business and as usual. But before I do that, let me introduce myself. If you are new to this channel, my name is Pramod Kumar. I am a CFA charter holder and FRM certified. This is my website, and on my YouTube channel, on this investor community, I analyze the stocks and see if it's good from the investment perspective or it's just a hype. Just now, this morning, I also did the Coke. Although it's a very good value company, but doesn't have that much much liquid left, right? So, but still, it's good for some people portfolio, and I have done a different videos. And if you want me to cover any videos, please put in the comment any high growth or value stocks or any IPOs. Like recently, I did the laminate as well. So just put in the comment, and if you haven't give so far, please give a thumbs up. I really appreciate that. Okay, to this video, and if you're new, do subscribe as well. Okay, let's get started before we waste some time. I have a lot of slides, a lot of data to go. Okay, if I go by this Nvdia, right, this is the ticker name. This is, if I go by the revenue by their market platform, right? So they are in different platform, like gaming platform. They are more into data centers, right? And so if you see the green, their gaming revenue is increasing, right? Their data center revenue is increasing. That's more like a cloud computing and all, right? And others are pretty consistent as well. But look at the gaming, right? So gaming is, and if I see that this is more into the robotics and this is like Internet of Things. So with the 5G, this is another. So 5G, when everything is connected, then Internet of Things is a really big, really big, and they are into the different sector. Healthcare, look at, is a monster sector itself. Transportation, robotics. So this is not a one specific. I like they're spread like a bread in or like a potato in any dish. So that's a bonus thing I like about this company so far. Okay, so let's understand more into their core business in terms of their CAGR revenue as well. So in the fiscal year 2020, which they have published the February, this 10K. So what they are saying in the gaming is 51% of the revenue is come from the gaming side, right? what is in there are 200 million plus gamer on our platform. That's a very strong gaming ecosystem for sure, right? Right, and the multiple secular growth drivers, switching, esports, VR rising, and so on, right? The data centers for sure. This is the GPU leader in HPC in 5 of the top 10 and 136 of top 500 fastest supercomputers. Leader in deep learning and AI, right? Used by all major cloud, and I have verified this. So pretty much all big cloud, and this is a good investment. What I was thinking when I was doing this slide. So if somebody wants to do the investment in the cloud business, right? So this is a good investment as well. So rather than have an investment in Amazon, AWS, and Amazon is very very expensive, right? Look at their P, or Microsoft. I also did a Microsoft video. Microsoft overall is a good stock, but this this is used in all the cloud business, right? So that's good, rather than on individual, right? And I'll show you other names as well. Okay, on the virtualization side, they are pretty good, doing good as well, 11%. And this is still this sector on the automotive side, right, which still need to be explored. For example, autonomous vehicles, right? So this is a big future. You never know, maybe future or 5 or 10 years from now, you never know. We don't have to drive. It's all automotive motors, and guess what? Is all this company, right? Okay, oops, let me hide myself, right, so you can see. So far, yeah, I think we are okay. I haven't hide that much, so I caught right on time. Okay, so large secular. Okay, autonomous estimated to drive 25 billion, right, in total in TAM, right? So that's by 2025. So that's a very big sector, and they are only 6% in that. So I will see in future bigger growth there. So that's from the not only the revenue diversification from the core business what we have understand. So far, okay. So again, this is the gaming. There you also use in Teslas. You see Tesla automations, EV. There's a big name there, right? And driving. Okay, now is more onto the individual slides. On the revenue side, I want to see how the growth is. So this provide that. So 18% year over year growth, right? And then recently on the gaming side, look at this growth spiked, 56% growth in the revenue from 19 to 20. And because of this coronavirus, right, I think this growth will further spike up when more and more people are at home. They have no outdoor doing activity. So what they will do, right? Play games or watch movies and all. But mostly people, I think, do these kind of game, right? Switching the Nintendo console and cloud gamings. Okay, so that's what my opinion on this. Okay, on the autonomous vehicle, they are still going 22%, and they are into the driving partners in cars, truck, robo taxis, mapping, sensors, software. They're in everywhere. And look at the name, right? This is a big global brand there. We already saw the data center in for Tesla, but on the autonomous side, look at the Toyota, right? So Toyota, this means Toyota is doing something. Volvo in trucking is pretty big, and so okay. So data center, yeah. So look at this Baidu Cloud in China, right? So that's and all right. So the growth is 43%. And 72% before, and now it reduced to 43%, right? Because maybe most of the cloud business is already done, so maybe that's why. But I do see maybe not that much growth here, but I do see the growth on this side, honestly, and the gaming side. Okay, so let's go a little bit deeper into the financials. So overall business looks very promising. So let's see whether the financials support as well, or just the hype, right? I don't like those hype business. Okay, from the 5-year data plot, when I see this looks pretty good, but recently it's come down, but it's not that bad, right? So what I'm saying, I'm showing three things right now. So this returns on equity, return on investment capital, and return on asset, right? So return on equity, basically it jumps from 2017 to 18 was 51%. This was very good period in 2018, but 2019 it's dropped to 38, right, 0.81, and then but it's still not bad, right? It's close to 40, and even the return on asset is come down, right? Okay, so every time if I go on the quarterly basis, the consensus they have beat. So this is their actual earning per share, so they are always beat. So whenever there is a surprise, the price goes up, right? So that's very good. It's not only one time, but is consistently they are doing. And recently with the quarter two, they on their earning report, they also beat by the 11 cents, which is a big number, right, in the coronavirus time. Think from that perspective. Okay, this is the price to earning ratio and price to book ratio. If I see the historical from 2015 to the latest this year, this is I literally don't like, because as compared to their earning, this 78 times of their price, right, which is very, very expensive. But the history shows they are always a bit expensive, but still 78, come on, 52 times in 2019. It was a 25, 24 in 15, or only 3 times book ratio. But even on the book side, there, as if I say, is 20 times, which is insane, right? So this looks a little bit over, not little bit, but actually pretty overvalue. Okay, on the margin side, if I see little bit come down from the returns to the net income to the gross profit, operating, and the net margin. So the margin looks pretty very good, and that's pretty normal for the technology or this kind of a semiconductor business, right? Over 60%, and this is 30 and 25 margin. From again, this is a 5-year chart, and it's been consistent, right? A little bit drop here, but it's not that bad. Over 25% overall, we can see all in one shot. The revenue side, it's keep consistent going. Little bit drop on 19 again, but 2019 is and the net income is doing well. Okay, let's go to the. So this one I really don't like it. Look at this revenue growth, right? So it's reduced from going up and down, right? So it was going up, but the pace of the revenue it's reduced. So it's clearly shown from 2017 the revenue is keep declining, right? So from 21, and then it's pretty much negative in 2019. Earning per share, it's reflecting their earning per share, which is again bad. So it was very high, but and then it's going down. Okay, now we have seen from PE side, we see from the enterprise value side. So enterprise value side, look at this. If you buy this company, it will take over 40 years to pay back, right? So that's a lot of, and on the enterprise over sale is over close to 8 or 9, which is very expensive. So that's not good. So it seems like the company financials looks okay, and even if I see from the raw financial side, but from the market perspective, I think the speculations and in terms of the growth, which is not really supported. So that's why it's a little bit not little, actually it's but very expensive right now. Okay, so from after the financial, let's see from their share repurchase plan, and I'll show any risk and then try to form the opinion on the share repurchase. The company did some share repurchase, and right, so which is a very good sign. 260 million share repurchase was happen until 26th of June of this year, and again they are authorized to share repurchase of 7.24 billion. They already did 7.08 billion, so this and for the next 2 years. So that's a very very good sign. Another good sign, I think, which I haven't mentioned so far, this is a dividend paying company, and they didn't cut the dividend. That's what it's mentioned. So that's another. So for sure the share price will go up. At least the company will buy during this low time, and maybe you never know, because that's why there is a spike in the share, right, in the price, because maybe the company is buying that, in the low hanging fruits, and the dividend is there as well, which is another good sign. So let's say next. Okay, this is on their quarterly statement. We have seen the annual statement. I just want to go over on the quarterly side. Let me again hide myself. So much data. I'm sorry. Okay, about that. So this is the first 3 month on the quarter, right? 3 month, and then I'm very surprised that even on this coronavirus time, right, the revenue still increased to. You see the gross profit increase, the revenue increase as compared to the last year of the 3 months, and it's really shows into their net income, right? Look at the growth pace from 300 to 917, right, millions, and this is per share is $1.47, and so this is way way good, right? So that's very nice. On the liquidity side, I have did analysis as well, and I think I don't want to show just to waste time, and it's also very good. Just take the words for it. Okay. Now come to the risk. Okay, this is big. So what's happening here on the risk side? The two risks which I because I'm trying to find if I got something. There's too much good thing I am seeing so far. So the one bad thing, I'll start from the number 2 point first. The Dell represent their customer, and they have approximately 11% of their total revenue, right, for the fiscal year 20, which was into their GPU business, right? But no other customers other than that has over 10%. So if Dell does pretty bad, because Dell is more like a personal computer and all, right? So who will buy during this times personal computers? So that's one phase we can see. Maybe end of this year, or there is a less in terms of the revenue, because if there is no revenue from its customers, for sure they won't able to supply that, right? So that's one aspect of it. The second aspect, which company directly itself mentioning that due into the next year, in 2021, we experience a disruption in supply chain and logistic, right? Provided by outsourced partners, basically in Asia, right? So they are expecting maybe in China, because of the coronavirus and other disruption, they have a significant. Although the main revenues from the US, 85%, but still some other part of their supply chain and all is come from that section, Hong Kong, China, and those Asia Pacific countries, right? So they mentioned that they have significant. Second risk, I think, which I haven't put it there, they recently bought a company, and it will take time to pick it up, right? So it will affect their bottom line next year, but they are not planning to cut the dividend. So that's from the risk side. So 3 risk is there, which certainly affects the next year. Okay, so now is the time to form the opinion. So the company is, I think the company at the moment is fairly priced, right now, but although it's maybe a little bit over the average, but I don't mind that. But if we see from the future perspective, on the risk perspective, I think we should wait if we need to invest, because of too expensive the PE and the enterprise value side, and also the company itself expecting the revenue loss in next year, and for sure if they miss the EPS, it will hit the let me come back. So if it misses their earning estimate, it will get penalized. And if you see the trend it's very fast, it goes up $100 and $200 recently, right? So this how fast it goes. I think when I see the pattern of their price chart, I haven't seen that pattern. It takes usually a few months for this company, although with this growth, to reach that high. But I think this is a little bit extra, maybe because of the Mercedes news and all, but people didn't go to the deep down what is really causing that, right? So for now, I think we stay a little bit away from this stock, but not for very long time. Just wait if the price comes down, and this is going to be very good future investment from that perspective, but not at this valuation point. So that's my opinion. Let me know what's your opinion is, and do you think is okay to buy this, and do you think the company will hit 500 soon? Or do you have any other high growth stocks in your mind and you want me to cover? Do please comment and give a thumbs up to this video. And there is also another channel, stories channels, which I also put the link. And if you have a kids, just like that channel, play a list, subscribe to it as well. So I really appreciate that on that one as well. Thank you very much, and see you soon on the next video. Bye for now.